Good day, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this Wednesday, the 3rd of November, 2021. Thank you for tuning in. Now, probably within 24 hours, I got my flight back to home again, and so I'm going to be there doing my show for a few days, and I got a few things I'm doing. Anyway, we're going to get right in here, and we're going to take a look at what's going on. Now, Janet Yellen. She says that she wants the Democrats to resolve the debt ceiling, and she says that this could be very important that they do because it could cause a calamity and a financial crisis and everything else. Probably worse than what we experienced in 2008 if the debt ceiling doesn't get resolved. But at the same time, they're putting forth this whole notion of which was laughable when they first brought it out. They talked about $1 trillion coin, and now they're putting forth this notion in a more serious way about $1 trillion coin to resolve the debt ceiling issue. You gotta know, guys, that this, not only would this be a gimmick, but it would also hyperinflate the dollar if they start releasing $1 trillion coins. I mean, what value is the dollar going to have if they start putting out $1 trillion coins? But they're actually taking this seriously, as a serious countermeasure to the debt ceiling. I just think it's kind of ridiculous, the notion of $1 trillion coin. But you know, in the past, this has been something that's been seen as being ridiculous. But now they're starting to take this idea seriously. And I mean, as more and more people take it seriously within the government, you know, they just might actually do it. I don't know, maybe they will. We'll have to wait and see. But let's get in there and let's open up the markets right here. Okay, there it goes. And let's take a look at the silver price today. Silver is at $23.46. It's down 5 cents on the day so far. It's making up gains from what its losses when we saw it go down. You know, 23.46. It's trying to come back. It's trying to bounce back. Well, I'll tell you what I think. I think it is going to bounce back, probably in the next few days, because we've seen this thing play out before, over and over and over again. So silver's at 23.46. Now let's take a look at cryptocurrencies today and see what it's doing. Today with cryptocurrencies, we're looking at a price with Bitcoin in particular of 63,220. Now it's just took a jump in the last hour or so of about $50 billion for the industry. The industry stands at $2,771,000,000,000, and we're looking at an Ethereum price of 4,643. So the cryptocurrencies are doing really well. Now let's take a look at the Dow Jones Industrial Average, and we're looking at 36,134. It's up 82 points right now, and we're looking at the Dow has been setting new peaks, you know, up over 35,000. This is the middle of a melt up, and now the Fed's talking about tapers. They're talking about tapering back on their bond purchase program. We'll have to wait and see how that flies, you know. Personally, my opinion is it's not going to fly very well. Let's take a look now at the, I mean, who's going to buy all these bonds? Right now they're buying 40% of them. But they're producing more bonds, you know, to keep up with, to keep these bubbles inflated. We have an awful lot of bubbles within the financial system right now. So crude oil right now is at $80.17. It's down 3.74%. No, $3.74. That's a big drop in crude. That's it. That's very interesting in itself. It's down 4.46%. You know, this is an oil-based economy. This could be a marked indicator of possibly a market correction to follow. Plus, we also seen an inversion of the bond yields between the 20-year and the 30-year. Generally, when we see bond yield inversions, something's up. The MOVE index has been going up the last few days. That's also an indicator that something's up. I'm thinking to myself a correction in the market, in the markets, possibly is coming pretty soon. There's a number of factors coming together. Let's take a look now at the MOVE index today. And we're looking at a MOVE index of 7104. And it has dropped back just a little bit from where it was yesterday. It had a peak yesterday of 78.34. So it's 7104 today. Let's take a look at the bonds and rates today, bonds yields. We're looking at a 10-year at 1.58, 1.589 today. It's up 4 basis points. And we're looking at the US 30 years up 3.6 basis points. We still have the inversion. The US 20 years still at 2.006. It's up 3.6 basis points, and the US 30 year is at 1.99. So we still have that inversion in the long end of the yield curve. Now let's take a look at the US dollar index. It's at 93.94. And the dollar index is going along sideways. Thank you guys for listening to my show. I had a great little vacation, you know. Like to keep you guys up to date though. I'm doing a short show today, just a short show. Nothing too long, maybe 10 minutes or less. And I'm not looking forward to getting back on the airplane. I'm going to tell you guys what. I remember back, you know, when I was a young fella, airplane flights were an enjoyable thing, you know. You had your flight booked, you just basically walked on the plane, you know. And you didn't have to go through big radar scanners or anything like that. No long lineups waiting to, it's just a breeze. You get on a plane and you'd always get a direct flight, and generally they'd serve you a nice meal. The airline seats were comfortable. You know, I noticed on my flight this time, I was riding in a couple of the older planes, you know, they're a little bit beat up and older, and I noticed the seats were much further apart. And you could get your feet between the aisles. So I rode on one of those, you know, and I put my foot like between the seats, between where the two seats are, and plenty of room for my foot, maybe an inch more than the length of my foot, you know. And I got on a newer plane, one that's just been built recently, and you could tell it was new, brand new plane. And I put my foot on the same spot on the seat where the seats join to the next seat in the aisle in front, and my foot didn't fit anymore. They had moved the seats back about 4 inches per row. In other words, 4 inches closer on each row. And I noticed my knees were touching the seat in front of me. I'd hate to think of a person, you know, like Shaq O'Neal, you know, or somebody who had long knees, would never be able to get in there. Their knees would be hunched up on the back of the seat in front of him, you know. And it just makes it much more uncomfortable. If you've got a long trip, I'd hate to think if you had to trip more than maybe 4 hours, you know, I mean, your legs would be all cramped and everything, and you wouldn't be able to get any relief, you know. And most of the time in the old days, you know, they used to turn the seatbelt sign off after you got up in the air, you know, you could walk around on the plane, it wasn't a big problem. Now they keep you strictly in your seat, and, you know, you can't get up and walk around much anymore. A seatbelt sign stays on mostly the whole flight, you know, and it's slowly the airplane industry. I'll tell you what, back in Russia, before the end of the, back when the Soviet Union was still the Soviet Union, they used to have building construction and stuff, and people that were working in the former Soviet Union would be building, say, apartments and stuff. Or no matter what they built. If they built cars, apartments, didn't matter what they built or what they did, because they were government subsidized, they basically just throw it together, you know. I mean, we're going to get paid the same whether we build it good or we build it bad or whatever. And so products and stuff coming out of the Soviet Union during that era, and apartments that they built and everything, they fell to pieces. But, right, this is what I see with the subsidization of the airline industry. It's just like it's going downhill. The service is going downhill. It's just getting to be ridiculously difficult to fly nowadays. And it's getting harder and harder and more difficult. You know, and driving, you want to drive, you're going to pay higher and higher prices for fuel. It's traveling is getting to be something that's going to be exclusively for these rich guys that got all the money. They don't have any problems. They just buy first class, and or if they if they decide to travel someplace they hire a big motor coach or something. But for us working class people, it's getting more and more difficult all the time if you want to travel someplace. And I can see a time coming, maybe 5 or 10 years from now, it would be damn near impossible. Anyway, listen, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.